Hi everyone, this is Pradeep Reddy, Associate Professor, SAYES University, Bhopal. Would like to bring you in this video about what is management education, management accounting, and the definition of it, nature of it, objectives, let us and the advantages and the limitations of management accounting. So let us start with the definition of management accounting. So, management accounting is that branch of accounting which deals with presenting and providing accounting information to the management in a systematic way so that it can perform its management functions of planning, controlling, and decision making in an effective manner. Why? Because till now we have seen what is financial accounting, what is the use of financial accounting in the day-to-day process of an organization, and today is the day of management accounting wherein every management wants to look up how to plan, how to control, and what to decide, because everything is result oriented nowadays and competitive world. So in this era, so it is decided that the accounting also should be turned or tuned into management process so that it will be helpful to the management to decide and to make policies. So that's why management is the branch of accounting which deals with presenting and providing accounting information to the management in a systematic way. And the other definition that is given by the American Accounting Association is management accounting is the application of appropriate techniques and concepts in processing historical and projected economic data of an entity to assist management in establishing plans for reasonable economic objectives and in the making of rational decisions with a view towards these objectives. As we know that every organization will be having objectives and different techniques are appropriated and concepts are there in line in order to maintain so that management can plan how reasonably economic objectives can be rational decisions can be achieved. So this is the definition which was given by the American Accounting Association. And now let us see the nature of management accounting. So first is the analysis and interpretation of data, future oriented, and serves as a yardstick. So what is analysis and interpretation of data? That is the data that is available from the financial accounting through the form of balance sheets and others. So we are in a position to analyze it, how feasible it is beneficial to the organization. And we are making a decision in such a way that it is future oriented. Since we are thinking about future, it is utmost important to every organization, and this management accounting serves as an yardstick which acts as a calculation tool which will be useful to the management in future. And the next one is the scope. Regarding to the scope, the first one is the financial accounting. So through financial accounting, it provides historical information useful for future planning and financial forecasting. And the next scope is the cost accounting. It provides various techniques of costing which is used in the process of planning and decision making and forecasting and budgeting. Management accounting exercises the tool of forecasting and budgeting in the process of planning, controlling, and decision making. And the next one is the tax accounting and tax planning. So the analysis of implementation of tax provisions on future projects comes under management accounting. And the other AR, internal control and audit, that is management accounting, highly depends on internal control system existing in the organization to identify the weaker sections of the organization. And cost control procedures, it includes inventory control, cost control, budgetary control, variance analysis, and others. And financial analysis and interpretation, whereas financial analysis techniques such as ratio analysis, funds flow analysis, trend analysis are used to analyze and interpret financial data, which all comes under the scope of financial management or accounting. And others are reporting to management and office services and statistical tools. Like various statistical tools like graphs, charts, diagrams are used in the process of planning, controlling, and decision making. And what are the objectives of management accounting are analysis and interpretation of financial statements, planning on policy making, decision making, controlling, coordinating, communicating, helps in evaluating the efficiency and effectiveness of policies. So that is analysis and interpretation of financial statements are. So we have to analyze and interpret the financial statements, and we have to plan the policy making, and we have to make decision, and how we have to control the activities of accounting, and how we have to coordinate the activities, and we have to communicate that information to the management. And at last, it helps in evaluating the efficiency and effectiveness of policies that are framed, and we have to take decision with relating to it. So these are all the objectives of management accounting. Once again, I will be repeating it so that we can understand it better manner. So first one is the analysis and interpretation of financial statements have to be done. Planning and policy making has to be done. Decision making has to be decided. Controlling has to be done. Coordinating has to be done. And communicating has to be done. And it helps in evaluating the efficiency and effectiveness of policies. And next, we will see the different tools and techniques of management accounting, which we are using are financial statement analysis, funds flow analysis, cash flow analysis, budgetary control, standard costing, marginal costing, management reporting, and statistical and operations research techniques. So these are the tools and techniques of management accounting. And now let us see the advantages of management accounting are. First of all, first is planning. So once the financial accounting part is over, management accounting part starts with planning, controlling, coordination, performance evaluation, organizing, motivating, communicating, and decision making. And these are all the advantages of management accounting. And followed with the limitations of management accounting are reliance on accounting data based on historical data, highly expensive and complicated application, and lack of objectivity, and it doesn't provide timely information, ignores important non-monetary information, and it does not provide detailed analysis, and it does not disclose the present value of the business, and it leads to window dressing, wherein false results and false figures can be interpreted, can be used in the balance sheet so that it can be manipulated, and hence management will take wrong decisions. So these are some of the limitations of accounting. So hope you have understood very better about the management accounting, the definitions, the nature, scope, and the advantages, objectives, the tools and techniques that are used here. Thank you, everyone.